All right, thanks everyone. I don't know if you saw that psychedelic beginning there, but it was pretty cool. But I don't really know how to use this software that great yet, but I will. I'm a trader. I'm not a tech guy, so what do you want? So anyway, today we're going to talk about consumer staples because there's a couple of things going on in this sector. It's overbought and it's at resistance. And there's just a principle of markets that stocks or markets that are overbought and at resistance tend to move lower. That gives us chances to trade. Let's see if this works. All right, that was pretty cool. So in a market, let's just think about this. Resistance is a large group of investors who are trying to sell their shares at or close to the same price. So when a market's moving higher, it's because there's not enough supply to fulfill all the demand. There's more buy orders than there are sell orders. So the people that want to buy have to be willing to pay higher prices to get the sellers interested. When we get to a resistance level, things change. There's enough supply to fulfill all the demand. And this isn't just in the stock market, it's in any market. But anyway, another condition that we can look at is momentum. Most of the time, stocks stay within their normal trading range. But if they get above it, if there's aggressive buying, we call that overbought. And the reason why this is important is because overbought conditions will draw sellers into the market. So this combination of sellers at resistance and sellers coming to the market because something is overbought, it doesn't guarantee it, but it kind of lets us know there's a good chance that the market's going to go lower. So oversold while at resistance. Actually, this is a mistake. So let me fix this. Overbought. Well, you can't get good help anywhere. This combination of being overbought while at resistance sets the stage for a new downtrend. And the opposite is true. Something that's oversold and at support tends to rally. But I apologize for that, and we will fix that. We're not here to do an English class. We're here to figure out how to make money. All right, so let me see if I can get the next. Yeah, see, I got it up here, right? Overbought conditions. All right, so let me see if I can get this cool conversion to the next slide. You ready? All right, I mean, that was kind of cool. It wasn't like totally cool. But here we have an example of a sector. This is XLP that's overbought. Now, this down here is what we call relative strength index. It's a momentum indicator. It measures how far a stock has moved or a market has moved from point A to point B in a given time period. And if the blue line gets above the red line, it shows us that we've reached an extreme. So we reached an extreme back here, it was time to sell. We've reached an extreme back here, it was time to sell. Now, not only have we reached an extreme, we've also hit resistance. So there's a lot of sellers around this level, and this overbought conditions will draw even more sellers into the market. So markets don't need to be overly complicated. People overthink them. You just got to think of the market as some place for you to make money. It's not for you to be right or perfect. Just like a golfer doesn't get an eagle on every hole, you got to just get rid of the bad shots, and the good shots will take care of themselves. All right, let's check this one out. All right, well, that was pretty cool. All right, well, this is the consumer staples sector, and it's important to remember that sectors are made of particular stocks, and some stocks have more influence on the sector than others. For example, Procter and Gamble is 15% of the consumer staples sector. Coke and Pepsi together are 20%, which frankly I don't know why. I mean, staples are things you need when like the world's coming to an end, right? So if a meteorite hits Washington D.C., are you going to go buy Coke and Pepsi? I would think you would go to CVS and try to, take all the vitamins and stuff that you can. I don't think people are going to be thinking about Coke and Pepsi, but whatever. That's really not our decision. It's just important to understand that for traders, that if you have a position in, say, Walmart, well, you should pay attention to what Procter and Gamble is doing because the action at Walmart may affect. I'm sorry, the action in Procter and Gamble may affect Walmart. All these markets are kind of interrelated and tied together. All right, so I'm going to try to do another one here. You ready? Yeah, look at that. All right, so here's me. I'm the stock jobber. This is Buddy the Bull. My daughter helped me draw him. I've been doing this for a long time. I know what important, I know what isn't, and hopefully you'll become a member and we can help you learn how to make money. All right, thanks everyone. Thanks for tuning in, and I will talk to you soon.